But the first time it came on, I missed it. It was gone like the same day, and it fell out of contract. So then when it came back around, I saw it at like 7 a.m. I called my realtor and was like, "Dude, we gotta jump on this. Like, we gotta get in there like this morning."
What's up, everybody? Welcome back to the Real Estate Investing School podcast. This is your host, Brody, and today is a real deal episode that we have. We're going to dive into one real estate deal, go through the ins and outs of it, what it took to find the deal, fund the deal, and ultimately force it, meaning getting creative and making it happen. And as you guys know, you're listening because you want to learn, you want to get educated so you can go and replicate something similar. And this is how it's done. You have to learn from people that you're wanting to trade places with. And the best way to not make the mistakes is to learn what other people have done and have not done and learn from that and then go and implement those strategies. So today is going to be extra exciting. It's going to be more of an advanced deal, I want to say, just because it's not your typical 1 unit, 2 unit, 3 unit type deal, but it's a 20 unit deal that I'm excited to get into with one of my good buddies, Luke Hoffman. So Luke, thanks for being here, man.
Yeah, appreciate it. Excited.
Yeah, dude. Excited to have you here because yeah, I just love what you're doing. Love like your family life. You just got back from how many months were you traveling?
3 months internationally with the family.
Wow. With 3 kids or 4 kids?
Yeah, 3 kids, 6, 8, and 12. 2 boys and a
Nice,
girl.
dude. That's
It was a
amazing.
blast.
Yeah. Those are the perks of being a real estate investor right there, I guess.
Yep, that was my goal. Way back in the day. So we checked that
That's
box. So it was
exciting.
pretty cool.
That's exciting. I know, like, anytime you guys have traveled, or even I think last year when you were out here, like, you don't do like the 5-day vacation thing. It's like you gotta really immerse yourself in the culture, which I love. It's so fun.
Yeah, I look at it like you're traveling that far, wherever you're going, might as well stay for a couple weeks.
Yeah, dude, so cool. And you guys stayed on a boat, I think, for I don't know, a week or something like that.
Yep, in Thailand, we chartered a sailboat, had our own crew and stuff, and stayed on the boat 24/7. They cooked, they took you all the cool spots, jump in the water, sleep under the stars on top of the boat. I mean, it was pretty cool.
That's awesome, dude. Well, I bet your kids have learned a lot from that, and just experiencing that is quite the summer vacation. So, well, dude, I'm excited just hearing a little bit about this deal. I didn't want to like get too detailed in it just when we were having a conversation on it, because I wanted to save it for this show where I can like authentically ask these questions that I'm curious about. But give us an overview of the deal that we're jamming on today, and then we'll dive into more of the details on it.
Sure. Yeah, so it's an MLS deal. A couple years ago, we purchased it. It's 20 units. There's 16 residential apartments and then 4 commercial storefronts. It's right on Main Street in our town, Dubuque, Iowa. It's kind of on the fringes. It's 11th and Main, so it's like the main part of our main street goes to about 9th or 10th Street. So we're right on that edge of where the progress is moving towards, which was one of the reasons why I liked it. But yeah, it was.
Mm.
I mean, it's a kind of a mixed use type space. Our town, there's a lot of older housing stock, so I'd have to look, but I think it was built like 1800s, 1890, something like that. So it's an
Wow.
old brick building, 3 stories. Yeah, it was just a lot of like outside my box, at the time when we bought it.
Yeah. So at the time you were what, mostly single family houses that you'd been investing in, or what?
Yeah, mostly single family up to like fourplexes, a lot of duplexes, fourplexes. We had 1 6 unit, or excuse me, 2 6 units. But it was quite the leap. I mean, it was more of a mindset shift for us. I mean, our town,
Mm.
I can buy single families all day for under 50,000, like that need
Wow.
rehab to burr. And
Hmm.
this was my first, we paid over $1 million for it. So it was like a drastic price difference, what I'm used to. So there was a
Yeah.
lot of, stress and learning, the learning curve and just going for it.
Yeah. Cool. Well, yeah, I want to hear about how you did that. So what was the purchase price?
It was ended up being 1.14 million.
Okay, 1.14, and you said it was on the market, it was on the MLS. Was it sitting on the MLS for a while? Did it need a lot of rehab?
No, so it actually was on the MLS about a month, and then it fell out of contract, so it went back on. But the first time it came on, I missed it. I didn't. I was doing stuff, and I just couldn't get to it fast enough. It was gone like the same day, and it fell out of contract. So then when it came back around, I saw it. I think I heard through the grapevine a little bit, but I saw it at like 7 a.m. I called my realtor and was like, "Dude, we got to jump on this. Like, get in. We got to get in there like this morning, not this afternoon." So we were just. I mean, it was speed at the end of the day.
Mm-hmm.
Um, the one thing I did when the first time it was on, I already had underwritten it, generally speaking, to at least see if I wanted to offer on it. And so even though it went under contract, I still did some of the legwork just to see and like run through the motion basically and teach myself some things. So when it hit the market, I already had all my numbers. I already knew, assuming nothing changes on the pro forma, I already know what my offer can be. Like I'm ready to go.
Cool. Yeah, yeah. Two nuggets right there. Just like it's interesting. We obviously get to like how you force the deal, but a lot of that comes up in just conversation, right? And I think that's two of the ways right there. One, like too many times something goes under contract and we're like, oh, I'm not going to put in a backup offer. Like, oh, it's done. I'm not even gonna think
Mm-hmm.
about it, and then it falls out of contract. So I love you said that. Like, if anything, it's practice, right? Where you've underwritten it, you got the practice, and you're like, oh, if this came back up, or if I were to put an offer in, this is what it would be for, right? And
Mm-hmm.
then two, I liked how you said speed. Like that's I've gotten a handful of homes that way where it really is just speed. Like you said, the first time, like I just happened to miss it, or you probably would have, got your offer in.
Mm-hmm.
Well, being on the other side of that, being one of the first ones that gets the offer in, that makes the move on it, sometimes it doesn't get to as many people as fast, and so less competition, and you're getting in there. They know you're serious. Submit an offer. So that's something I
Yeah.
think that isn't talked about that goes a long ways.
Yeah, for sure. And we already had talked to the bank, the first time around too, being as $1 million deal. Like we wanted to have those conversations up front before I even started looking. And this one hit the MLS. So we already had that road like 80% paved with the bank of like, hey, this is coming down the pipe. It's just a matter of when I find one essentially.
Yeah, yeah, cool. So speaking of finding it, you mentioned that like this one was a stretch as far as being outside of your comfort zone a little bit, more units, higher purchase price, things like that. Were you before this came up, were you already like looking for stuff like this and kind of expanded your mindset to like, oh, I want to push myself if something like this comes up? Or was it more like it came up and you're like, maybe we could actually make this work?
No, it was actually so. It was following one of the Maui masterminds that I went to with you, and one of my takeaways from that mastermind in September when we were there was, I had two or three things that I wanted to accomplish before the end of the year, and one of them was to go under contract on a 20 to 40 unit building, and so I just made that dedication in my head like before I left Maui. All right, we're doing this. Like we got 3 4 months to find one essentially, and so
Cool.
yeah, I mean, I just was like on the hunt, and I mean, it's like anything. Somebody gets a new car, you go down the street, you see them everywhere. Like as soon as you
Yeah.
start looking for something, you see it. And I just wasn't
Yeah.
looking for it before that point.
Yeah. Dude, so good. I actually think I remember that. I actually think I remember that because that was like pretty soon after we like first met. And yeah, I remember like having the conversation if you wanted to get into more like almost like consolidate instead of like a bunch of single family houses, like
Hmm.
getting more of the established apartment complex and whatnot. But I love that you said that because I think that's like boom, that's another just like the way that you forced it, or another like golden nugget is you like shifted your mindset. And I think so often like you find what you're looking for, right? And
Hmm.
if you don't expand your mind to it's the same thing with setting goals, right? If you set a certain goal, like you're honing in on that goal, and most likely you're not going to achieve much above and beyond that. It's the same thing with your annual income that you want to make, because you set that as a goal, and that's what you consider yourself worth dollar per hour. So you're not
Hmm.
really looking for too many opportunities above and beyond that, right? So I,
Right.
I just yeah, such a good concept of like the power of just thinking bigger and differently, and then you
Hmm.
look for bigger and different opportunities.
Yeah, and I mean, when I went to that mastermind too, I was never a huge goal person. It just never really interested me before that. But I went to the mastermind. I spent a good chunk of money to be there and be around the right people. And so I basically just made that commitment of like, well, we're setting goals. I guess I'm just going to go all in on this and see, try it out basically. Like everybody else says it works. So let me give it a go. And I'm glad I did. I mean, it made us a lot of money. And honestly, it changed my life going to that first mastermind. It changed our whole trajectory with our business.
Dude, that's amazing. I love that. I love hearing that. Okay, so we know how you found the deal. I want to get into how you funded it, because that's like usually that's like one of the biggest hurdles mentally people can't get over, because it's like, oh yeah, of course I want to go get a 20 unit, but like the problem is it costs a lot more money and I can't afford that. So what kind of
Hmm.
helped you get over that? And then ultimately, how did you finance this deal? Because I know it wasn't just, oh yeah, I have this cash laying around and I can just go pay cash for it.
Yeah, so I mean, this one it starts getting pretty complicated fast. So I'll try to keep it as simple as I can. But essentially, I used a bunch of different strategies. I didn't have any the down payment money. I needed roughly like 230,000, give or take, to close. And I basically had about 30 grand that I was like, oh, I can set this aside. So I signed the contract, and my realtor's like, you got the money, right? And I'm like, oh yeah, yeah, we got the money. Like, we'll figure this out. And then like telling people behind the scenes, I'm like, yeah, I have no clue how we're going to close. And I was leaving, we were going to close in February. I was leaving for the winter for 3 months in January 1, essentially. So I'm like, I don't know how we're going to do this, but let's go. But we ended up, it was my first time I raised private money. So I found a couple people they were essentially watching what I was doing in our marketplace, raised some money there. That was about 50 grand. They essentially just gave me a 4 month loan. And right or wrong, I mean, I probably backed myself into a corner a little bit with the short timeline, but I had 4 months after close. I borrowed it right before we closed to get that back to him. And then I was trying to figure out what else to do to raise money. And so we ended up we had a
Did
building
you
that
just
had some
did you just
equity.
pay them on that? Like, sorry, did you just pay them
Good.
just a flat like interest rate, or what?
Yeah.
Were there
Just
points
10. It
involved with
was,
that, or
no, I mean, they weren't experienced private lenders. It was their first time too. So it was just a 10% straight up. So the 40 grand or the 50 grand total cost me 5 grand in interest
cool? Okay, okay,
just for that form. Assuming it was pretty pricey private money, but it didn't really matter. I mean, I just needed to get the deal done.
yeah,
Is kind of how I looked at it. It was the cost of the
yeah,
deal.
okay,
Um, but the rest of the money essentially came from a 1031. So I had a building. It was in kind of a rougher area. I wasn't crazy about it anyways. And so I was like, oh, I can sell this one. I had a buyer that I had been previously talking to. So I kind of knew I could sell it. But the whole thing with 1031s, if people aren't familiar with that, is you typically go on a forward 1031, you sell something, the qualified intermediary holds the money until you find something else to put it in. And so there's a process there so you don't get hit with the taxes. But you can actually, talking to them, you can do what's called a reverse 1031. And so you actually buy the new property first, and then you back into the sale of the other one. And so I'd never heard of that, but the company I was talking to was like, "Oh yeah, we do this all the time. It's totally fine." So we ended up going down that route. First time for everything. I mean, I tried. I'm like, "Oh, what do we have to lose? That's 6 grand in fees to pay them to do that." And so we basically got another 80 grand of equity that we were able to roll across. So mushing it all together, we were short about 40.
uh
And
huh,
so my banker really wanted to help us push this through because I needed 20% down at the end of the day. And so we had like 19, well, I guess we had essentially like 38,000 in equity in our personal home, but it needed 40. And so they essentially just kind of throw me a bone and put a second on my house for a little more than they were supposed to.
yeah,
And they're like, all right, you're going to pay 5 grand a quarter till this is paid off, like a 2 year loan, straight pay down. Like I mean, they helped me out, honestly.
yeah.
So I mean, so it was basically private money, a reverse 1031, a little bit of my own money, and then leveraging my own house to the hilt to make it happen.
And you did it. Okay.
Yep.
Cool. No, I actually like it. I like it for the right person. It's so funny. Like, it's so funny. Like you give different advice to different people, right?
Sure.
And I think, like going back, like some of my advice to myself would be to like be a little bit more, I don't want to even use the word like risky. Um, I don't know, there's probably a better word for it in general, but I feel like sometimes I was too conservative, which is the advice I'd give to like the average person, because they're the
Hmm.
opposite, right? They're the ones getting like the truck payments and doing all these things they shouldn't do. So the advice is usually like, hey, think twice. But like for myself in my scenario, like just because I know how I work now, and I know like sometimes if my back is up against the wall in a certain way, like it's a good thing. And I think for you, like you're not doing anything that's not smart at this point, because you probably know like, okay, this is what potentially this property's worth. This is like worst case scenario. I can get out of it this way, this way, this way.
Hmm.
Like it's not like you were just putting yourself in this bad spot that hey, I hope all this works out. If not, like I'm selling
Right.
my house and I'm living on the street.
No, and I mean, it was essentially, it was the fastest way to get to cash. I mean, we had millions in equity in our portfolio. We just,
Yeah.
to tap that, there was a lot more hoops to jump through and a lot more red tape with the bank. And so it was the easiest way to get the deal done, essentially.
Cool. Yeah.
So
I
yeah,
love that. I just
it
want to
wasn't our
point that
last
out.
dollar type of thing.
Totally. Yeah. I just want to point that out because I think that's it's important on like both ends of the spectrum
Hmm.
for people to like, hey, it's okay to like shuffle things around. And I think too, there's a lot of millionaires out there that don't know they're millionaires because they're just sitting
Hmm.
on a lot of equity, a lot of things, and because they don't feel like they're a millionaire, they make decisions that millionaires don't make, right? Where it's like, oh, I can't do this
Yep.
because I can't afford this, or I can't afford this. When you just kind of make it happen if it's the right thing. So, cool, love that. Tell us a little bit more about what happened after that, because I know you ultimately ended up burring this property, right?
Hmm. Yeah. So the part of the process too, I mean, I did the walkthroughs and stuff before I left town, but I was leaving. So we went into escrow. I walked it, did some inspections and whatnot, but then I left town for the winter. And I actually went to Arizona, but then I was in Maui right up to when we closed. We actually left Maui to fly back to close because my banker was like, I need the confidence you're in town. Like, this is a big thing for you. So, like, you need to be in town. So come back. So we came back for 2 weeks, closed, and then left again. Went south. But, um, yeah, I mean, it was terrible. Like, the whole month of January, I was sweating it. And then we got into February, I was just sweating it. I mean, I remember there's hours I was on the phone with different buddies that do real estate, trying to convince them to talk me out of it because I was very, very nervous. Like, I almost backed out multiple times, but I'm glad I did. I mean, yeah, at the end, we essentially, I have people on staff that do construction. We burr single families all day long, and so we just went into it from a burr standpoint. We, like anything, you buy something, people want to leave for a variety of reasons, and so we had some vacancy, so we turned those, raised the rent, turned some more, raised the rent. One of the big things that we did was it's like two parcels. So there was two water meters that fed the whole building. And so
Okay.
we spent like 21 or 25 grand to split it into 21 meters. And we had to repipe some of the building to make that happen. But we were able to push all that utility expense right on the tenant then at that point. And so
Mm,
that was, it was probably $1,200 a month that we were able to recapture.
cool.
So looking at it from like an ROI standpoint, it was a no brainer. Inside 2 years, we
Yeah.
had our money back. Um, so we went through. We just actually finished. Well, we just gave notice 2 weeks ago to the last unit to kind of finish up the entire burr. We we essentially burred it and we refied it about a year ago, but we had one more unit just kind of hanging out there.
Okay.
But yeah, so we got it reappraised almost a year to the day. It was like 2 days from a year. We reappraised it. It appraised at 1.485 million.
Cool.
And with that, we had I put in give or take 150,000 of my own money from I sold another property and just kind of moved some things around, and then
Hmm.
we used all the cash flow for the first year, dumping right back in the property. So
Yeah.
we were about 200 grand into the rehab essentially.
Okay. Cool. I want to pause there because there's I just want to break that down a little bit. First question: when you bought it, what was your payment to the bank, and then on top of that, what was it? Was that a long term loan, and then you refinance and just to a different long term loan again, or was it something different that you did with the bank?
Sure. Nope. The way my bank works with me is this was again rates were a lot lower. So my initial loan was like $6,200 a month. That was just a 20-year loan, spread out as a 5-year balloon. The interest rate's 3.5%, so it's a pretty solid loan that way.
Yeah.
And then when I refied it, they actually let me not like refi the whole loan. So I have two loans now. I just took a second, so I have 200 grand on a 20-year,
Cool.
3-year balloon, but it's at 7.25. So I mean,
Cool.
the rate's a lot higher, but it brings my total debt to like 8,700 a month in payments.
Cool. Okay. Awesome. And what's the cash flow now, and what was the cash flow when you first bought it?
So when we first bought it, it was barely like a little over $100, like 101, $102, give or take. Right now, so we fluctuate a little bit because we started about half the building we do short term, midterm, and so that can
Okay.
fluctuate. Obviously, we're in Iowa, so there's some seasonality there as well. But I mean, typically we're seeing like free cash flow. We look at 20% reserves. That's how we calculate it. But like actual true free cash flow is right around like 5 grand a month.
Cool.
So
Sweet. That's
across 20, so
awesome.
that's just shy of 300 a door, give or take.
Yeah. Yeah. That's awesome. So cool. So when you bought it, you weren't losing money on it right out the gate, which probably made you feel better, I'm
Hmm.
sure. And then
Definitely.
as far as you would just, a tenant would move out and you kind of rehab that unit a little bit and then raise rent and get somebody else in there.
Yeah, we didn't want to clear the building. I mean, I didn't have the capital to just, clear the building and start doing all this rehab. So we just did one by one. And, sometimes we'd have two going at a time, but it just made sense. We had a lot of other rehabs, a lot of other things going on too. So I didn't want to just like abandon all the other projects. Um,
Yeah.
because it would just sit vacant at some point, if we kicked too many people out. So it wasn't worth it. But yeah, when
Yeah.
we took it over, just to give you an idea, like the gross rents were at like 9,500 roughly. We're now pushing typically close to about 17 or 18 grand a month in
Wow.
rent.
Yeah. That's awesome. Good for you. And part of that, when you refinanced it, how much did you cash out? Did you get your initial investment back at that point or some of it back, or did you just get a different rate on everything?
Nope. So on when I refied it, I got 200 grand back. So essentially all the money up until that point that I had put in for the rehab, I got all back, including my cash
Cool.
flow. And I look at it, we paid off our investors and things with some of our own money. So all in all, I look at it, I probably have somewhere between 75 and 100 grand of like real cash still in the deal today.
Yeah.
But I mean, it's
Cool.
probably, I estimated the value this morning probably at 1.8 million. In the last year, it's changed again with our rates. Our rent rates have went up a lot since the last appraisal, and
Yeah.
commercial at that point.
Yeah. Yeah. So
So I
cool.
mean, 100 grand into a almost $2 million property is pretty sweet.
Yeah. It's so sweet, dude. And I think like this is in a nutshell, this is like the power of real estate or one of the many powers of real estate. But like,
Hmm.
I wish this same kind of concept that you just explained, there's like 1,000 variations of it, but like, that's how you become wealthy in real estate. Like people that are listening, like,
Hmm.
yeah, there's different methods and things that you did to kind of get to that point, but like all of those deals are pretty much the same where if people are listing, you go back, what you did is you're into this property, you got, you know, most of your money back, but you're into an almost $2 million property for, let's say, 100 grand, it's about 5%, right? Down on this
Hmm.
property. And then on top of that, you're cash flowing, you said a little over 5 grand a month with
Right.
everything after all your expenses and whatnot. So it's like you look at your return on and then you have
Hmm.
more equity in than that, right? Another whatever, probably, 750, 700K of equity probably sitting in it, right?
Yep.
So not only do you have equity, like that one property alone almost is making you a millionaire, right? And then on top of
Hmm.
that, you're into it low cash, and then on top of that, you're cash flowing a high amount that's bringing you in $60,000 a year of passive income, which your return on your cash at that point is really really good. Just
Hmm.
crazy. You stop and think about that.
Yeah, I mean, I fully expect, our market here is still ticking up at a slower rate now with rates and stuff, but like there's no reason in the next year and a half, 2 years, we shouldn't be essentially have $1 million in equity forced on that property. And so in 4 years, we made $1 million off one building. I mean,
Yeah,
that's the power of real estate, like you said.
yeah, insane.
Where
Plus
else
you
do you see
take
that kind of returns?
Yeah. Plus, you take into account all your cash flow that's adding up over the years during that time, and then on top
Hmm.
of that, like I'm sure you've got some tax benefits that have came from owning that.
Yeah, actually, that was the first building we did the cost segregation studies on too. So last year, whatever your tax year would have been, yeah, it was like 170 grand. We were able to write, back off our income. And we have multiple businesses, multiple real estate holdings. So, I mean, that was like, I think I figured at one point it was like 50 grand in tax burden that it wiped away by
Wow.
moving all that stuff around. So, I mean, there's just
Yeah.
another avenue that it saved us a ton of money.
Yeah. Which is like that's legit cash you would have spent.
Hmm.
Which I think is another thing that kind of gets overlooked a lot of times too when you're factoring in numbers and returns and everything that way. Yeah, dude, this is fun. This is a fun deal. It's fun it's what's fun about real estate. And I think that like going back, and I have so many too, like different deals that are like the exact same kind of like structure as far as, oh man, this is like making me sweat a little bit. Am I sure I want to do this? Like, okay, I'm like scrapping on this for a second and getting really creative in how I'm doing this. And, like done same stuff with HELOCs and different things. And anyhow, it's just crazy. Like you go to that kind of fork in the road and what would have been different if you didn't make that decision because things were
Hmm.
uncomfortable for a minute. And I think it's important to just like, you didn't make the decision stupid, you made it scared, right? And there's a difference in stupid decisions and scared decisions and when you should and shouldn't make those. But like, look what it's turned into.
Yeah, I mean, it's about muscle building too. I mean, now we did another $1 million deal last year on a storage unit facility. So like that was a little bit scary because different industry, but or different asset class. But now I was just talking to a buddy yesterday. I'm like now doing $1 million deal in my market, like it's still a lot of money. Don't get me wrong, but like it's not as scary anymore. I'm like, oh, it's $1 million. Yeah, let's do it. No problem.
Yeah.
Like
Yeah.
now it's like 5 million or 10 million. I'm like, ooh, I don't know. Let's pump the brakes for a second.
Yeah. Yeah. Dude. So
So you
yeah,
level yourself
so
up.
good. You do, man. You do 100%. And that's just like everything in life too, like,
Hmm.
and that's why it's important to hang around different people who think bigger and like all of a sudden that the average way of thinking, because you leveled up the average
Hmm.
content you consume, the average deals you do, the average people you communicate with. Now that's the new norm and it's just not scary or strange.
Right. Yep. They support you in it.
Totally. Well, dude, anything that we've missed on this one that you would say like, hey, this is how I forced this deal. Here's some other like nuggets that I would give if somebody's trying to go out and do something similar.
Yeah, I think it was really comes down to like the banking relationship I had. We've done multiple deals, but I had a lot of forward conversation. I remember there was literally a time I can see in my mind, like sitting in his office and just talking like, "Hey, I want to do $1 million deal. What do I need to do to get there?" And he outlined like, "You need to do this in your personal life, do this, this, and this in the business." And he gave me a roadmap, and so I did it all. And then when I was ready, I'm like, "Hey, I completed what you asked." And then he was like, "All right, let's do a deal."
Cool.
Sometimes those people they want to help you, like the bankers and different advisors. Like just ask what's the roadmap to get there, and then do it,
Mm-hmm.
do the work.
Yeah. So cool, dude. I love that. And would you say like you would give that advice to somebody that's wanting to do bigger deals, like go make a relationship with a local credit union, or is there any specific advice with that?
Yeah, so I use a local bank. It's probably 10 branches, give or take, in our region. Yeah, I mean that's where my best experience has been with from a banking relationship. Somebody that you can sit down in their office. I mean, I can text my banker any time of the day, and he'll reply. Like some of that personal relationship, really compared to like a bigger nationwide broker when you're starting, like that person's betting on you at the end of the day, and their neck is on the line just as much as yours is. So they're willing. I mean, he's underwrote many deals for me to help me, and just I'm like, hey, I think this is a good deal. What do you think? And he'll look at it and be like, well, what about this, this, and this? And sometimes it's valid and sometimes it's not, and we talk through it. But yeah, having those
Yeah.
people, I mean, your friends and stuff are, your buddies that are in real estate. They're going to always try to help you figure out how to make the deal. But the bank's job is to see where it falls apart, and so
Hmm.
you can merge all that information and see the middle of the road. Like, is it a good deal or not?
Yeah. Love that, dude. I love that. Yeah, I think the game changer for me was when I started realizing that like different banks wanted to meet with me or like wanted to like go to lunch with me or go golfing with me. And it's like, hold on a second. The script kind of flips to where it's like,
Hmm.
oh, please like give me a loan, please give me a loan, where you realize like, hold on a second, that's what they want to do is they want to make it work because that's also how they get paid, right? So instead of
Right.
looking at it like my team versus your team, it's like, dude, we're on the same team to like go and get this thing done and create these win-win scenarios. And I think just
Hmm.
that mental shift, at least for me, like made all the difference.
No, 100%. I had that same experience.
I love it, dude. Well, this has been awesome. We're bumping up on time. I know people are going to want to connect with you as they should. What's the best place for them to do that or find you?
Yeah, probably find me on Instagram, Luke Hoffman 42. It's where I don't post a ton of necessarily like content, but I put a lot of stuff in my story, just what I got going personally and work related stuff. I mean, some interesting stuff sometimes. Things I run across. I'm getting a lot of random places and houses, so It's kind of fun sometimes.
Yeah, it's super fun. Yeah, I like the family stuff too. It's well, yesterday you were, I don't know, it's like homemade bread or something like that when you were going on a walk with the family or something like that.
Yeah, we were working on a job site, and my wife, she's been making sourdough bread, so she made bread and brought it to us on the job site, and warm bread and homemade apple butter, and
Oh
just
yeah.
bring our employees in as extensions of our family.
That's so cool, man. Well,
It's fun.
this was fun. This is fun jamming on this deal, and we're actually we need to bring you back to talk about some of your other stuff because I know you have like an awesome like vacation home you bought in Florida, and that was really cool the way you did that, and a handful of just other deals and things you have going on that'll be fun to jam on. But appreciate you. This has been awesome. I know I got a ton of value, and I know listeners will also. So
Yeah,
thanks for jumping
appreciate it,
on,
man.
brother. All right, we'll catch you
Absolutely.
next time.
Thanks.